Okay. Imagine investing in a country where the GDP is a staggering $1,856.4 billion USD, with a steady growth rate of 1.4% per year. Sounds promising, right? But here's the shocking part. Most people think Mexico is an economic disaster, but while you read headlines, smart money is quietly pouring in, taking advantage of the $40 billion passive income boom. Can you guess what's driving this massive influx of capital? It's not just the attractive GDP growth rate, but also the country's favorable business environment, which has led to a significant increase in foreign direct investment, FDI, of $45.5 billion USD. Stay until minute 8. What I reveal there completely changed how I think about investing here. Intro. Welcome back to LATAM Money Secrets. Imagine you invested $50,000 in Mexico City real estate in 2019. Today, that's worth around $73,000, considering the ETF EWW's current price. That's not luck, that's emerging markets. In this video, you'll learn 3 specific things: how to capitalize on Mexico's growth story, the surprising fact that nobody talks about, and the insider opportunities that can give you a significant edge in the market. You'll discover how to navigate the local economy, identify lucrative investment opportunities, and make informed decisions to maximize your returns. Section 1. When it comes to investing in Mexico, most people focus on the GDP and inflation rates. But what do these numbers really mean for investors? Let's break it down. Mexico's GDP of $1,856.4 billion USD is impressive, but it's the steady growth rate of 1.4% per year that makes it an attractive destination for foreign investors looking for stable returns. Now, let's talk about inflation. Mexico's inflation rate of 4.7% is higher than that of the US, 3.1%, UK, 3.4%, and France, 2.8%. However, this doesn't necessarily mean it's a bad investment opportunity. In fact, the country's FDI of $45.5 billion USD is a testament to its growing economy and favorable business environment. When I looked at the data, one number stopped me cold. Despite having a higher inflation rate than the US, UK, and France, Mexico's ETF EWW has still managed to deliver an impressive YTD performance of 27.87%. This is a surprising fact that nobody talks about, and it's a game changer for investors looking for higher returns. To put this into perspective, let's compare Mexico's inflation rate to that of other countries. While it's true that Mexico's inflation rate is higher, it's essential to consider the overall economic landscape. The country's GDP growth rate and FDI are still promising, making it a viable alternative for investors looking for higher returns. In fact, Mexico's ETF EWW YTD performance of 27.87% is significantly higher than that of the US and UK markets, indicating a potential for higher returns on investment in the Mexican market. This is a critical point to consider, as it highlights the potential for investors to capitalize on Mexico's growth story. Section 2. While US investors fight over S&P 500 scraps, savvy investors are looking to Mexico for lucrative opportunities. Here's the insider knowledge. Mexico's nearshoring boom is creating a $40 billion passive income opportunity. Let's look at some real dollar examples. You can invest in Mexican stocks via the ETF EWW, which has a potential ROI of 15–20%. Alternatively, you can consider FDI in the manufacturing sector, which has a potential ROI of 12–18%. Or, if you're interested in real estate, you can invest in Mexico City, which has a potential ROI of 10–15%. To put this into perspective, imagine buying a prime Mexico City apartment for $180,000, which could generate a rental yield of 10%. In Miami, a similar apartment would cost around $800,000, with a much lower rental yield. This is the kind of opportunity that can give you a significant edge in the market, and it's essential to consider the potential risks and rewards before making a decision. Section 3. Imagine this. You're John, a savvy investor from the US looking to diversify your portfolio and generate passive income. You've been eyeing Mexico's real estate market, and for good reason. With its proximity to the US, growing economy, and favorable business environment, Mexico is an attractive destination for foreign investors. Let's dive into John's story and explore the real numbers. John has been researching Mexico City, specifically the trendy neighborhoods of Polanco and Reforma. He's looking for a luxury apartment to rent out on Airbnb, capitalizing on the city's thriving tourism industry. According to his research, the average price per square meter in Polanco is around $3,500 USD, while in Reforma it's around $2,800 USD. For a 100 square meter apartment, John would need to shell out approximately $350,000 USD in Polanco or $280,000 USD in Reforma. To put this into perspective, similar properties in major U.S. cities like New York or San Francisco would cost at least 2-3 times more. In London, you'd be looking at prices upwards of $1 million USD for a similar property. John is impressed by the value for money in Mexico City and decides to take the plunge. He finds a beautiful 2-bedroom apartment in the heart of Polanco, with stunning views of the city. The property costs $320,000 USD, and John estimates he can rent it out for around $1,500 USD per month on Airbnb. This translates to a gross yield of around 5.6%, which is significantly higher than what he'd get in the US or UK. But John doesn't stop there. He also explores other cities in Mexico, like Guadalajara and Puerto Vallarta, which offer even more attractive prices and rental yields. In Guadalajara, he finds a modern 3-bedroom house in the upscale neighborhood of Zapopan, costing around $200,000 USD. The estimated rental income is around $800 USD per month, resulting in a gross yield of around 4.8%. John's experience highlights the potential for real estate investment in Mexico, with its relatively low prices, high rental yields, and growing demand for luxury properties. As a foreign investor, John can purchase property in Mexico through a fideicomiso, a trust that holds the property on behalf of the foreigner. This process is relatively straightforward, and many real estate agents and lawyers specialize in helping foreigners navigate the process. Section 4. Now let's talk about investing in Mexican stocks and alternatives. The iShares MSCI Mexico ETF EWW is a popular option for foreign investors, offering a diversified portfolio of Mexican stocks. With a YTD return of 27.87%, this ETF has outperformed many other emerging markets. John decides to invest $10,000 USD in the EWW ETF, expecting a potential return of around 15–20% per annum. But how do foreigners invest in Mexican stocks from a standard U.S. brokerage account? It's relatively simple. Many online brokerages, such as Fidelity or Charles Schwab, offer international trading capabilities, including access to Mexican stocks and ETFs. John can simply open an account, fund it, and start trading. In addition to stocks, John also explores alternative investment options, such as investing in Mexican real estate investment trusts, REITs, or private equity funds. These options offer a way to diversify his portfolio and generate passive income, while also benefiting from Mexico's growing economy. Section 5. Now let's address the elephant in the room: risks. Investing in Mexico, like any other emerging market, comes with its set of challenges. John needs to consider 3 main risks: currency stability, political, and legal. Firstly, currency stability is a concern, as the Mexican peso can be volatile against the US dollar. This can affect the value of John's investments, especially if he's investing in Mexican stocks or real estate. To mitigate this risk, John can consider hedging his investments or diversifying his portfolio across different asset classes. Secondly, political risk is another concern, as Mexico's political landscape can be unpredictable. Changes in government policies or regulations can impact the economy and, in turn, affect John's investments. To manage this risk, John stays informed about local politics and regulatory changes, and considers investing in companies with strong track records and diversified revenue streams. Lastly, legal risks are also a consideration, as Mexico's legal system can be complex and bureaucratic. John needs to ensure that he's complying with all local regulations and laws, especially when investing in real estate or starting a business. To mitigate this risk, John works with reputable lawyers and accountants who are familiar with Mexican laws and regulations. This is educational content, not financial advice. Conclusion. So what are the key takeaways from our deep dive into Mexico's nearshoring boom? Firstly, Mexico offers a unique combination of proximity to the U.S., a growing economy, and favorable business environment, making it an attractive destination for foreign investors. Secondly, real estate investment in Mexico can provide high rental yields and relatively low prices, especially when compared to major U.S. or European cities. Lastly, investing in Mexican stocks and alternatives, such as the EWW ETF, can offer a way to diversify your portfolio and generate passive income. If you're interested in learning more about investing in Mexico and other Latin American countries, be sure to check out our free guide at LatAm Money Secrets. Be here, calm, and stay tuned for next week's episode, where we'll be exploring the hidden gem of Colombia's coffee region and the potential for investing in sustainable agriculture. But that's not all. We'll also be diving into the world of impact investing in Latin America and how you can make a positive difference while generating returns. From affordable housing to renewable energy, we'll explore the opportunities and challenges of investing in this exciting and rapidly growing sector. Will you be ready to seize the opportunities and make a real impact? Tune in next week to find out.